heard about Elliott wave theory before. What is it?
Elliott wave theory is based on the idea that the market forms the same repeatable wave patterns over and over. Knowing where the market currently sits in this pattern provides clues as to what might happen to the price next.
So, I'm guessing Elliott is or was the person who came up with it.
Yes, the theory was developed by R. N. Elliott in the 1930s and was popularized by Robert FRACTAL in the 1970s. Its proponents claim that crowd behavior produces the patterns and trends we see in markets. The wave patterns, as defined by Elliott, are the manifestations of mass participant psychology.
You sound a bit skeptical.
Let's go through what it is first, then I'll go through the weaknesses, and finally what we can take from it, even if it's not my cup of tea. So, Elliott said participant psychology makes markets move in predictable waves. As its most basic level, there is one larger wave that goes with the trend and a shorter wave that goes against it.
Yes, I agree with this. When I practice trade, I often see these two waves in the chart, one forward and one back.
Good, well done for practicing. Elliott called this first move the motive wave and the second the corrective wave. These are labeled with Roman numerals 1 and 2. The motive wave can then be split further into 5 smaller waves. These subwaves are labeled as 1 to 5.
Okay, I'm following.
You'll notice subwaves 1, 3 and 5 advance. These are called impulse waves. Waves 2 and 4 are again called corrective waves. Elliott said there are 3 rules for motive wave formation for it to be valid. Wave 2 always retraces less than 100% of wave 1. Wave 4 always retraces less than 100% of wave 3. And wave 3 always travels beyond the end of wave 1, and it's never the shortest wave.
Okay, so does that mean the waves can be different lengths?
Yes, and last different times as well. So long as they fit into those rules, wave patterns don't have a set length or duration.
And is it the large corrective wave split into smaller waves, like the motive wave?
Yes, it consists of 3 sub-waves, 2 against the trend and 1 with it. These are labeled A, B and C. This 8-wave structure is the basic Elliott wave sequence.
Right, so just to recap, there are 5 subwaves in a motive wave. That's the wave that advances the upward trend, and 3 subwaves in a corrective move. What about the downtrends?
The opposite is true in a downtrend. The larger motive wave is down and the corrective wave is up.
Great. Can I just ask, what happens at the end of the cycle?
Once the cycle ends, it begins again. Elliott expected that the market will make another 5-wave advance after a correction ends. However, it gets a bit more complicated.
I'd expect nothing less.
Elliott said waves are fractal in nature.
What do you mean by fractal exactly?
Elliott wave theory doesn't stop at 8 subwaves. Elliott considered the individual subwaves could themselves be made up of even smaller patterns of waves. The 5-3 wave structure for major cycles are the same as for smaller moves. For example, impulse wave 1 is actually made up of 3 impulse and 2 corrective waves, and wave 2 is made up of 3 smaller waves.
I'm following. And this goes on with every wave, I presume?
Yes, these smaller waves are labeled differently as well. It didn't stop there. Elliott identified 9 levels from the very long-term grand supercycle to the very short sub-minuet.
Goodness me, labelling all those could get confusing.
It can, and messing it up might bring more risk than benefit. Setting rules around wave structure means repeatable patterns can develop.
Like the price patterns we studied in the previous module.
Yes, some symmetrical triangle patterns were identified by Elliott as fitting the wave rule. There are others, which we won't go through in detail here, but a few examples are on screen.
And do traders trade these patterns?
Yes, like I showed in the previous module, the price targets and stop losses might be based on the Elliott wave sequence, but it's broadly similar.
So I take it you're not a massive fan of Elliott wave theory?
Not really. It sounds like a really useful rule-based theory with clear practical applications when trading. However, its main weakness is that even if we believe the market moves in repeatable waves, is that it is really difficult to count and accurately label the waves. Elliott wave enthusiasts can therefore always blame their reading of the charts rather than weaknesses in the theory.
Oh, okay. So the markets don't move in these set wave patterns then?
No, I don't think they do in today's markets at least. And if everyone figured out they did, it would probably stop behaving like that because participant behavior would adjust. In the 90s, Richard Swannell backtested Elliott waves. Of the thousands of equities, indices and commodities tested, Swannell found that in about 65% of cases, Elliott wave theory proved too unreliable to be used to trade with any degree of confidence.
That's not great, is it?
No, it's not. Remember, traders pay spread to place a trade. That suggests on average at least 65% of trades would have proved to have lost money. Hardly a revolutionary new theory. However, interestingly, Swannell found that Elliott wave theory works best in equities that have lots of volume and move according to the key forces of fear and greed. This ties in with Elliott's assertion that the theory worked well on indices and very liquid securities. In absence of a useful theory, this gives us probably the biggest thing to take from Elliott wave. Elliott assumed it, and Swannell's work appears to underline what we've been saying through the course. Firstly, that the collective psychology of market participants influences the way prices behave.
You mean the battle between bulls and bears is reflected in the price action?
Yes. Secondly, the market does move in waves. While this might seem an obvious statement, it helps confirm one of the main assumptions behind technical analysis, that the market moves in trends. Whilst Elliott wave isn't for me, it helps me get comfortable that technical analysis, properly applied, will help create an edge.